Well, good evening, everyone. This is AJ Monty, Chief Market Strategist with the Market Guys. And as I typed into the Q&A box there, I'm pretty pumped up about tonight's presentation for a couple of reasons, actually. Number one, we are looking at a market that is following the technical signals like a charm. And the market has gotten so predictable that it's almost too good to be true. And I'll show you some of the things that I've been putting out in the report so you could see the evidence as we pull that up. If you're new to the Market Guys Q&A session here, the open house, this is interactive. So I will be monitoring the Q&A box. If you have something you want to type in there, go right ahead. I will eventually ask for stock symbols so we can analyze your stocks as we go along, but at least wait for the stock symbol queue up before you put that in. Questions are okay at any time. Ron, you're asking about oil such as OIH. I'll talk a little bit about that after we get into the overall market analysis. So I'm going to get right to that and not waste a minute. If you are a member of our Oracle services, you probably got the weekly market report. And I'm starting off with the DIA. This is the Dow Jones Industrial Average. I'm starting off here because if you see my cursor, and I got a beach ball spinning there. I don't know what's happening, Bill, but hopefully I'm not going to lose this. Where my cursor is right here, there is a resistance area where I drew that horizontal line. And if you look very carefully down at the bottom, and I'm going to zoom in here for you, if you look at the bottom, there is volume that is decreasing volume. And the market has been going up on decreasing volume, and there are gaps below the market. Now, if you've been following the market, guys, you'll know that gaps below the market are bearish. And when the prices are going up and the volume is going down, that's bearish. And when we hit a resistance area and we start to pivot lower from resistance, that's bearish. So if all of the signs are pointing lower, does that mean you should go out there and take more of a long position? Well, the answer to that is no. And so you really have to make sure that you're using the technical charts to help you with making decisions. Because if you're not doing that, if you're not using the charts, then you're going to be more or less, rolling the dice here, and we don't want to do that. The whole idea of using charts and following the signals is to put the odds in your favor. And so the diamonds, you have to understand, I look at multiple things. Not only do I look at a daily chart, but I do look at the weekly charts. I will also look at the monthly charts, and here's a weekly chart there. I don't know if there's a lag in the screen, but you'll see the weekly chart there. You'll also see the monthly charts here coming up. There's the monthly chart, and you can see that the volume dramatically lower as the market continues to go higher. So these are basic concepts of technical analysis that are completely separate or independent from the fundamental numbers that you might be reading on some of these analyst reports. Now, the fundamentals, I'm not saying they're not important. I'm just saying they're not at the top of the priority list when it comes to making a decision. Those are things you should look at while you're making the decision, but ultimately it's the technical signal that helps you know when to pull the trigger or when to get out of a trade. Now that's the diamonds. Keep this in mind as we move forward. All right, now let's go to SPY and look at this. Now, if you look at the triangle here, I am expecting a break. Now here's the term, it's a breakout below the triangle line. It's not a, sometimes people say, oh, it's a breakdown. No, whether the price is going up above resistance or down below support, that is a breakout. So I am still expecting a breakout to the downside on this triangle. Now, if you look at the Russell 2000, which is a more broad-based index, and this is what we look at each and every week on the weekly market report, today the Russell 2000 rallied, but it's still very close to resistance up here. Now, watch what happens. If the price does go down from what I have here, even though this is a bullish engulfing pattern, at any time, if we start to see a weakening in this upward trend, and we have this high followed by this higher high, followed by a lower high, can anyone tell me what that pattern would be? If you, okay, Joe, you tell me make that a full screen. Let me see if I can do that. All right, let's see if that'll help you. Can anyone tell me what that pattern would be if, in fact, it shows a lower high than the previous high up here? Can anyone tell me what that is? Yes, Jeff, thank you. It's a head and shoulders pattern. So if we show a head and shoulders and it starts to drop below the neckline, which would be down here below this support, then watch out below. This market's in big trouble. Okay, finally, let's look at the Qs. The QQQ is the NASDAQ market. Last week, I drew this line as the resistance. I did say that it could very well go higher to test that resistance. Today, we did get a bullish engulfing pattern on the Qs. I am expecting it to go back up to this high and then pull back here. And you can see that the volume is still dropping as the market goes higher. So if you're in any of the tech stocks right now, if you are in, let's say, Microsoft, or you're in Dell, or any of the other tech stocks that are part of the tech sector, then what you want to do is you really want to be sure that you are trailing your stops higher and making sure that you're got the trigger ready to get out or protect. Now, with that said, I want to just go over some instructional content here. So before we go into your stock symbols, so you can see some of the strategies or techniques that are used. In the example, would anyone like to be the first one to put us? Actually, we're looking at OIH. Here, let me do that. We'll look at OIH. Look at the tech sector. I could kill two birds with one stone right here. Question is, do we get into OIH? Well, if you look at what's going on, you have to first analyze price or direction of price or trend with volume. And the price is still going higher up here, but the volume is still going lower down here. Now, I'm not saying it's going to break down just yet because we have a gap up here, but if you are in OIH at this particular point, you have to look at not just the trend, but you have to look at other support levels like the role reversal. This is a role reversal, previous high. Once broken, turns into support. So this whole area under here is going to be a major support level. So if you own OIH, you need to put your stops below the key support levels. And then as the stock goes higher, let me do this again for you. I'll erase some of my lines so you can see, again, the strategy in managing risk. As the stock starts going higher, if that's the case here, if the stock starts moving higher and filling these gaps, you have to ratchet or trail your stop up with the price of the stock. Now, I prefer manual movement. I prefer you manually trail your stops instead of you trying to actually do this with a computer. Because here's why. Let's say you buy OIH right now at 38. And you say, okay, well, I'm going to put a $1, I'm going to put, let's say I put a 3% stop loss on price. Okay, let's say I put a 3% stop loss in price. Well, that's going to be roughly, it's going to be roughly $1, let's say. Okay, so if you put your computer is monitoring a 3% stop loss, then you're going to get stopped out if the stock drops about 3%, which is going to be right around here. But notice, you can get stopped out on this level here using the computer method of trailing the stop, but then the stock goes a little bit lower, bounces off support, so it winds up doing this. It goes down, it stops you out here, it goes down to support, and then it takes off and goes higher. You see, when you have support, we actually expect the stock to bounce off of that floor. And so if you manage your stops manually, you can be putting your stops, instead of letting the computer do that here, you're going to manually put your stop here, and then as the stock goes higher and maybe breaks out over another key resistance area, you could move your stop from here to up here when the stock goes out and breaks through that resistance ceiling. See, that's why learning how to trail the stops manually is going to put you in a much better position as the stock starts to move higher, because what's happening is you're allowing yourself to lock in more of a profit as the stock goes higher versus letting the computer try to figure that out for you. See, there's a little bit of, I guess you could say, artistic ability or skill needed to manually calculate key role reversal support levels, because the role reversal support level is one that is much more important than just a conventional support level. Here's what I mean by that. Let's erase all lines again. Does anyone want to use another stock symbol? Anyone? First one come, first one served, right there. Who's going to type in a stock symbol? And then I'm going to, okay, SSW. Wow, Ron's fast. Okay, let's put SSW in there. SSW, and let me look for a key support level. Now, if you look, can anyone tell me by looking at this, here's the audience participation part of the story. There's a couple, if not, there's actually a few role reversal areas that I can see on this chart. I'm not going to point them out to you until after I get some answers from the audience. How many of you can identify some role reversal support levels? And that's where a former resistance area was broken and then turned into support. Who wants to be brave enough to answer or put a number in there? Remember, the right side of my chart is going to be where the price is. Okay, Vincent and Robert actually come with a, very similar. Vlad, Sophie, yes, all of you are actually in the same ballpark. You're all answering 19. Amelia, I don't know what 3 is. I don't know what you meant by 3, unless that was a typo. And you're pretty close too. You put 19.6. Well, here is a role reversal line. And let me help all of you who have never drawn a role reversal line to learn how to identify it. So here we are. We're looking at the price up here. What you have to do is you have to scan. You have to use your eye and scan back in the chart using a horizontal line. Watch. I'm going to use the horizontal line. So here is a line right there. See that high? And if I drop that line right there, you'll see that that former high, which here, if I had a label, I could put the word resistance right here. This was an area of resistance. You could see it was resistance here, resistance here, resistance here. Maybe not to the penny, but this whole area right in here was formerly a ceiling. But then, guess what happened? Right here in April, mid-April, mid last month, the market broke out of that high. It pulled back and then bounced with this hammer pattern here and went higher. So the former resistance turns into support. Now that's one area of role reversal. But how about this? If you wanted to fine-tune it, and this is where Ann picked up her number, Ann scanned back with her eye and picked that high. Isn't this interesting? See, if I just drop my horizontal line right there, look what happens, right? We have another breakout in this area with a bullish engulfing pattern, a breakout of the ceiling or a breakout of this resistance, and then it turned to support almost to the penny. We have these long shadowed hammers here acting now as support. So what do you do with these role reversal lines? You have to use them. Don't just, oh, I'm really good at drawing a role reversal line. Yeah, it's great if you know how to do it, but if you don't know how to use it correctly, it's all in vain. You're just not using the tool correctly, and this is where a lot of people go wrong. Now we've identified two role reversal lines. Let's assume that today there was a green candle. I know it's a red candle right now, but let's assume it was a green candle. And we buy the stock at, let's say, $20 right here. Let's say we buy the stock at 20 bucks. You now have two lines where you can gauge your risk from. Now, I can put a stop below 1960 and maybe put the stop at 1950, or I can put my stop at 19. Okay? Here are two very good places to place my stop. And that's okay. Let me get rid of this line. What's the difference between these two stop level points? In other words, if I put my stop lower, what has to change with regard to the number of shares that I get to buy? Let me reframe that, and I'm looking for answers here. If I use the lower stop level, what do I have to do with regard to adjusting the number of shares that I get to buy? Here's a multiple choice to reframe that. Thank you. Jeff got it right. If I'm going to use the lower stop loss number, I have to buy less shares. See, I have to buy less shares to keep the risk the same as if I were using this. See, if I allow myself to lose a little bit more, I get to buy more shares. But if I give myself more room to lose more, I have to buy less shares to keep the risk the same. I don't want to confuse that, but I have a video that I did, and my partner and I posted the video on the Market Guys library page, and you can go to videos and look that up. Look at the 1% rule. And I go over this in almost every single trade alert. When I put a trade recommendation out, whether it be for an equity trade or for an option trade, I always identify where the risk point is. And on the second page of the document, sometimes the third page of the document, what I do is I basically outline the stop loss level using the 1% rule to again, help you protect your positions. Okay. Now, that is the strategy that we use with manually adjusting your stops. That is how we use the charts to draw a role reversal. And remember the concept of having to adjust the number of shares. Just don't go in there and say, oh boy, I have an extra $2,000 in my account, so what I'm going to do is I'm going to take that $2,000 and buy as many shares of this $20 stock that I can with that money. It doesn't mean that, okay, I'm just going to go out there and buy 100 shares of the stock because I have 2,000 shares. No, don't do that. Use your formula. Use the mathematical formula to manage risk. Now remember, when I started the presentation, before all of our technical challenges that we had there, when I first started, I told you I'm really excited about this market, and I am, because they are following the signals so accurately. And watch what happens when I start to ask for stock symbols as we analyze these stocks that you bring to me. I want all of you to get a pen and paper ready so you can write down some of the new trade candidates that might pop up as we analyze everyone else's stocks, because you'll see how good this gets technically as we identify the signals. Okay, so get ready. Who wants to be the first one to in fact, what I'll do, I'll take the first three and then I'll tell everyone to stop when the first three are in, and then, okay, let's see. So we have CLR. Okay, now you can stop. So CLR, SWKS, and VZ are the first three that come in. then I'll ask you to retype your selections in there. Again, this is kind of a race, but I don't want the symbols to wash out. All right, they're always starting to wash out. Okay, so Kelly has given me a symbol. Kelly says I'm sorry, it's not, that wasn't Kelly. That was yeah, this Kelly. Kelly says CLR looking to do a credit put spread. Buy puts to open June 40s. Okay. Now for the non-option trader, a credit put spread is a bullish position. Okay, that would be where you're taking a long position. Actually, for those option traders that know that already, we just have to explain that we're taking a long position. So, what do? First thing, here we go. This is the routine. Every single time we look at a stock, we want to first identify the trend. Then we want to see whether or not the volume is supporting that trend. If the volume is supporting the trend, so in other words, we see that the trend has been going up. Can anyone see that? Look, here's how I draw a trend line. I start with a pretty obvious low. That happens to be on a pretty long green candle. So I start there, and then with my eye, I try to connect as many or come as close as I can to as many of these lows. Now, watch. Let me show you a mistake. Some people take that low connected to that low, then they project out and they go, oh, well, that can't be good because it dropped below the trend line. Well, remember what I said. You have to connect as many of the lows. So you're more or less taking the mean average of the lows on the trend line. So I start with the obvious low, and then I'm going to do this. I'm going to try to adjust. See how I did that? Now, does it really matter if I'm down below that line by a couple of pennies? No, because the trend line represents an area of bouncing activity, an area of demand. So this is the best representation of what a trend line should look like. So again, another lesson on the how-tos of drawing a trend line. Now, what are we going to look for? We have to look to see if the volume is doing what? Supporting the trend. Is it? Well, look, the price has been going down here, and the volume has been going down. Now, I don't want to confuse you here. This is an uptrend here, but this is a down leg here. Now, here's my question to you, and I'm even hoping that someone gets the answer wrong. You know why? Because those are the people I need to reach out to and help. Here's the question. If I have a down leg, that's this line right here. I have a down leg, in other words, the sellers are moving the market down here, and we are approaching a support trend line, and the volume is going down, is that bullish or bearish? That's a more intermediate question, but yes, thank you, Ann. Ann was the first one to answer. Let's see who else. Anyone? Okay, Amalia said, okay, all right. Now, Amalia said it's bearish. Now, here, Amalia, watch this. The leg is a short-term trend within a longer-term trend. Think of it this way. The tide of the ocean is considered to be like the long-term trend. The waves in the ocean are the intermediate trend. The ripples on top of the water are the short-term trends. This trend line here is a longer-term trend or intermediate trend. Think of that as the wave, and this is a small ripple. The leg is being controlled by the sellers. So think about this. If the sellers have been controlling the short-term leg and the volume has been dropping, it means the sellers are getting tired. And that's what Ann said. So if the sellers are getting tired, it means that it's a bullish sign. Okay, so that if you need clarification on that, we will continue to cover that in our Oracle alerts. I talk about that all the time. I'm always comparing price movement with volume support. All right, now, another thing, can anyone see anything else out on the chart here that could give us an indication that the bulls are starting to come in? Can anyone tell me what else do we see on the chart? The hint is it happened yesterday. Okay. Anyone? And I don't see. All right, I have a little bit of a delay. And oh, there we go. Okay, I'm getting the answers starting to come in right now. Okay, Kelly says bullish engulfing. Vlad says bullish engulfing. Nathan, large green, which is exactly right. Terry, you're right. Amelia, yes, bullish engulfing. Robert, Joe, green candle. Sophie, great. See, this is where, let me tell you something. I feel so good when I get so many people answering correctly at the same time. This is what I'm referring to here. Let me try to, I'm going to expand my chart to this right here. When I see a big green candle overshadowing or engulfing a previous red candle, that is bullish. That is a bullish engulfing pattern. Now look what's happening. Here we had a bearish engulfing pattern. Here we had another bearish engulfing pattern. So back here we had two bearish engulfing patterns back to back. What happened? The price dropped. And it dropped significantly. On this bearish engulfing pattern, the stock went from a high of around 49 down to a low around 46.5. So that was, in one day, that stock dropped about 6%. So these bearish engulfing patterns actually were a great indication of what was to come at that particular time. But now the tide has turned. Now we have a bullish engulfing pattern that is bouncing very closely within pennies of this trend line, which I'll back up now, which is a more intermediate trend line. It's bouncing within pennies of this support line. So this is a good place to get, it's a good place to get long. Let's put it that way. So I would get long that stock based on what I've seen. Now, here's part two of the question. Here's part two. Now, if I do, Kelly, this is specifically to you now, if I do get long the stock here, where is my area of concern with regard to managing the risk? Where's my area of concern? Can anyone tell me what's the answer to that? If I do go long, whether I'm taking a long option position or if I'm taking a long equity position, where is my area of concern? Now I don't have any answers. Okay, Eduardo, correct. Joe, correct. Lloyd, correct. Look at that again. I'm feeling really good because you're all answering the right answer. This is the line that I have to watch out for, that trend line. So if I buy the stock here, I want to put my stop somewhere below the trend line. It could be even as far down as here. The key is I want to be getting out if it breaks down below that trend line. Now this might actually be a little bit too far down because I have the support level down here that might hold. But you know, you don't want to let the stock drop $10 because you're giving it that much room. I would say that this is a fair area right around 43, 44, 45, right around that particular area. So that is how you manage that position. And going back to Kelly, if you can take a good premium out of that, in other words, if that's giving you enough, I guess you could say premium, then I would go ahead and take that position. That's not a bad position at all. So again, this is one I would write down on my trade blotter I put in my watch list. This is one that I would absolutely consider as a long position. Now I'm going to Ron because Ron says he doesn't own this one, but he's looking at NNA. Okay, so I'm going to put NNA in there. What's going on? The symbol didn't come up. NNA. Okay, now let's do the same thing because repetition is going to be the best teacher. By the way, for those of you who are Ranger fans out there, we got the Tampa Bay Lightning just scored against the Rangers, so I'm multitasking here with keeping track of the playoff game over there. So here all right, I'm not going to point it out. Where is the role reversal? Let's go through the checklist. Where is the role reversal support on this one? Who wants to be the first one to answer? Bum, 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 bum. Let's see. Terry says 380. Oh, wait. No, Terry says 360. Okay. Absolutely right, Terry. Here is an area of resistance. Let's zoom in so we can do this. Now, just because this is a cheap stock doesn't mean that the technical signals are going to be any different. In fact, on the contrary, it doesn't matter what price the stock is. See, I could even say, okay, here's an area of resistance. See how the stock went up and then went down here, and then it came back up, hit resistance again, went back down. This area right here is an area of resistance. So on this day right here, which is whatever day that is in March, last day of March, it broke out. And then what happened? It broke out, and then this area became support. Again, don't worry. This is really only a 5-cent violation of that support level. It's not an exact line to the penny. Remember, think of this almost as a big fat magic marker line. Let's make this. I'll draw parallel lines. This whole area right here between these three lines is the area of support. You see? So the single line just gives me a kind of like an eagle eye zooming into that area, but make that a big fat line in your mind, because that's what's going to happen. This is an area of support. Now, we see that the price is going up and the volume is going up. Don't worry about the candle today. I'll get to that in a moment. But the price is going up with the volume. That means that the volume is supporting the buy side. Now, here's what you do. Here's what you do, Robert. Is it Robert? I'm sorry. Ron. Here's what you do. If you're thinking about buying this, you're going to have to wait and basically have a contingent buy alert on the board. And what does that mean? See, if you're going to buy this, you have to wait for the candle to be green and the volume increasing. If tomorrow you decide to buy this and it's not a green candle, then do not buy it, because here's what could happen. If it's a red candle, this stock could easily come back down here and do that. Okay? So you have to wait for the green candle. And then, let's say it's a green candle tomorrow, and you buy it at, let's say, 390. Okay, I'm going to erase my lines and say, okay, let's say you buy it up here, and it's a green candle tomorrow. You're going to put your stop below the role reversal support. So if you buy it at 390, I would say maybe put a 40-cent stop loss order and put your stop at 350. Okay, I like cheap stocks as long as, I mean, the volume, not quite what I'd like to see it. I like to see volume at least 500,000 a day traded, But the reason I like the volume is because if there's a lot of volume, it means the institutions are supporting it. Even if it's a low price stock, there are institutions that actually get into that. Now, finally, let's go back and look at the weekly chart on this. See, if I erase all lines and I look at the weekly chart, you can see that the trend, here's what I'm doing again. Remember, practice, 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 drawing your trend lines and drawing your role reversal support lines and all that. Here I started an obvious low. I'm going to use this low as a guide to project up to try to connect some other lows. And what am I doing? See how I'm trying to find the mean in there? There it is. This one went a little bit low, that one a little bit below, that one's a little bit higher, but there's my trend line. So you can even use the weekly chart as a guide to set your stop. So again, even if you buy it at 390 up here, let's say you buy it at 390, you can still use this trend line as a support to maybe put your stop down around 3.5 right there. Okay. Now, I'm not doing this too quickly, I hope. So I want to make sure everyone gets this, because if you look, stock after stock after stock, we're able to find trend lines, support lines, and all other kinds of support for the technical signals. And what this does for you is it allows you to be able, and by the way, the range is just scored, it's tied up 1-1. It allows you to be able to trade more like a robot instead of a human being. Listen, if you could try to put yourself in that frame of mind where you're thinking more like a robot with no emotion than the human trader who has lots of emotion, you're going to be following the numbers. You're going to follow the numbers, and the numbers are going to tell you when to get in and out. The charts, the support levels, the volume, all that considered is going to help you put the odds in your favor. And then as soon as you learn how to do this consistently, that's when it gets really fun. Okay? All right, now, again, all the other symbols I've already scrolled through my Q&A box. They're gone. It saves time if you could just retype them. All right, Robert, SLV or gold. If you give me your position or what you're thinking about doing, that will help me help you better. Okay, so let's go with SLV. By the way, I just want you to know, today I sold out of my SLV position entirely. That's a temporary position. It's temporary, but I completely sold out of my SLV position. And here's why. You'll see the answer as to why on the charts. Now, for the Equity Oracle subscribers, we did, a while back, recommend SLV as a buy. It was somewhere down here. So if you do have an SLV position, I do not send an alert out most of the time when you should get out and take profit. This is why being on these calls has an advantage. I would, however, recommend you get out of that SLV position, not the AG position, but the SLV position. I would recommend you get out of that and take your profit. Because our goal was when the gap was filled, and we're almost filling this gap up here, when the stock got up to the $17 level, that was our target price. So we're up significantly over the last couple of weeks from our entry point, and we're very, very close to our exit target. Now, watch. I'm going to watch to see how the answers roll in. I'm going to give you some multiple questions, and let's see who's paying attention. Is the volume, let me zoom in here, is the volume supporting the trend right now? So the trend is up. Is the volume supporting the trend, yes or no? Can anyone tell me, yes or no? Simple yes or no. Thank you. All of you who have answered say no, except Joe, who said nope. No. Here's the trend. Here's the short-term trend. You see it? The trend is up. Volume is down. It means the buyers are getting tired. Okay, erasing the lines. Here's second question. What are some of the other things that we see below the market that could very well lead us lower to lower prices in the market? What's the answer there? Look at that. Bam, 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 like rapid fire. All of you. Gaps to the downside. Yes. Here's a gap. Here's a gap. Here's, that's pretty much all the gaps. So what I think is happening is I think that silver is going to come down to fill either this gap, or maybe both. So what I did is I sold out of my entire silver position, and I had a lot of silver, but my goal is to buy it back roughly $1 lower. And what I'm doing is I am in a strategy to accumulate shares. I think silver could drop a little bit more, at which time I will load up on it once again because of the next question I'm going to ask you. Once a gap fills, let's see who's been following along with the market, guys. Once a gap fills, what is the percentage, or what is the chance in percentages that the stock will reverse? Look at that, I even finished the question. What is the chance of the stock reversing after the gap fills? So in other words, here's a gap below the market. What is the chance that the stock will go and reverse after the gap fills? There's an 80% chance that that will happen. Number one, there's an 80% chance that the gap will fill. Once the gap fills, there's another 80% of the chance that it's going to reverse and go up. That's a huge percentage, folks. I was talking to someone who lives in Connecticut who happened to be a casino dealer, and she and I were talking about percentages of, odds, more or less, of winning. The casino always has the odds stacked in their favor. Well, if we were looking at this as a casino with the market here giving you obvious signals, you could put the odds in your favor by 80%. 80%. Did that hit anybody like it's hitting me over and over again? If you could put the odds in your favor by 80%, what does that also mean? It means you're going to be wrong 20% of the time. So if you decide to buy SLV down here, and here's your support level, it could even be role reversal support here, okay? Where do you need to put your stop? You need to put your stop down below here because there's also a 20% of the chance that it will not go up from there. Okay, wow, I have to say, I think that's the first time that we had such a large response, all being 100% accurate. Everyone who answered has the right answer, so thank you. Okay, let's keep it going. We got 13 minutes. I'm going to try to get some more stocks. Who's another shareholder who wants to put the stock symbol? Wow, and fast to the keyboard. UNH. UNH is holding shares in, UNH, I put the wrong symbol in there. UNH, here we go, type that in again. Okay, and if you're still holding UNH, you are in good shape. Here's why. I'm going to do this quickly. You could say this is a role reversal support. Boom, right there. Resistance broken is support here. Here is your secondary. Actually, this is your first level of role reversal. Here's your secondary. Here's your tertiary down here, role reversal. Okay, so Ann, this is specific question to Ann. Ann, if you're holding the shares, where is your stop loss order? Because there's a couple of things happening on the chart that have me a little concerned. And we'll point those out after Ann answers me. Okay, Ann does not have an answer yet. There's a little bit of a delay. Ann, please, I'm not going to embarrass you. I'm helping you. Don't worry. Okay, Ann tells me okay, here's we go. Ann, no one knows your answer yet. I'm going to ask that everyone else tell me where, if you bought the stock or you were long the stock right now, where would you be putting your stops? Who wants to answer that? Who wants to answer that question? Lightning are up 2-1. Okay. Who's going to answer? We have, boom, boom, boom. Nathan says 116. Okay, I got it. Shannon says 115. Mike says 110. Jeff says 110. Robert says 115. Herschel says 114. Sophie says 10, 115, 112, 114. Guess what? You're all right. Because all the answers that you all gave me were at least below this. So anyone who answered 115, 114 right here, you would have all been right. If you had just stops below this first support level, that's good. Well, guess where Ann has her stop? Ann has her stop at 110, which is also right. Look. See? Ann has her stop down below here. Now, Ann, my question to you is, again, and everyone can follow along with this, is the volume here supporting the upward leg? Yes or no? Let's see, what's the answer? Who wants to answer that? Amelia, you're right. Ann, you're right. Jeff, Robert, everyone. Charles, you're all right. Yeah, trend is going up, or the leg is going up, the volume is going down. That's number one. Number two on our checklist, we are not far away from resistance up here. That's number two. Number three, can anyone tell me what we're seeing here? There's a term that I use quite often. Here's the hint. 1, 2, 3, 4, 5 green candles in a row. What do we call that? Can anyone tell me? What do we call that? Thank you, Amelia. That's a stale green light. There is a good chance that tomorrow or the day after, we're going to start seeing a red candle come up here. So, Ann, I know this looks and feels like a really good long position, but I would save yourself about $6 of profit, and I would move your stop up from 110. Let me get all my lines off so I can make this very clear. I would move your stop from 110 down here. I would move it up to 116 here, or maybe to at least 115, because if you move it to 115, you're keeping it below this role reversal line here. Now here's another thing, Ann, and this is where we start to get into price patterns. I'm watching the clock. We will do more stocks, don't worry. If I have a high here, and then I have a higher high here, followed by a lower high here, what is this pattern called? Can anyone tell me? I'm drawing it for you. What's this called, folks? Boom. And if I see this, what's that called? Anyone tell me? Let's see. I'm looking. Looking. Anyone? No one's answered the right one yet. Okay, yes. Now, Amelia got it. Jeff, Robert, John, all of you got it right. This is a head and shoulders pattern in the making. So this is why I'm really very cautious here in helping Ann, because if the price starts to drop down, you may not want to let it drop to 110, because by then the head and shoulder pattern is complete, and this becomes an extremely accurate topping pattern or a reversal pattern. So I would keep my stop really close, and then, and if it drops back down and bounces, you could buy more and wait for the stock to go higher. But right now, the technical signals are showing pretty bearish signs right now. And if I go to the weekly chart, you'll see that this is also an extreme move. Going to the monthly chart might even be more bearish. Wow, look at that. And does this look different to you now? You got a major upward leg here, or trend, I should say, and the volume is consistently going down. So I would not want to stay long that stock for too much longer. Okay, let's go. More stock symbols. Let's go. I'm on a roll. Let's go. Who wants to be next? Oh, what is that? BRCD. Oh, is that Broadcom, Vincent? I think that's Broadcom. Okay. BRCD. Brocade, sorry. Okay. There's the monthly 20-year chart. That's a basing pattern if I've ever seen one. But let's look. Okay. Now, Vincent, you didn't tell me whether or not you own the stock, so please help me out with that. If you own it or thinking about buying it, I see signs that could actually support either way. I see some signs here. Okay. Okay, you're long it at 9. Okay, now I'm going to put some pressure on you. Where is your stop? Where's your stop? You're long. I even have to adjust my chart to show everyone where you're long it. Whoa. You're long it way, way, way down here. Now here, watch this. As I shrink my support level, my price line, you're long it way down here. Okay. Here's the most important question. Where is your stop? Vincent, don't be afraid. I'm not going to pin you down and embarrass you. I'm helping you. And by the way, your suggestion here is helping a lot of other people too. Okay, Vincent, I don't see where your stop is, but let me put a suggestion in. I would raise your stop. This is a daily chart. I would raise your stop to, ready for this? The closest, I got to adjust my chart here. I would raise my stop to here. Can anyone see the role reversal now? I would raise my stop wherever it is to let's put it at 1160. I would raise your stop to 1160. Now here's the interesting thing. Oh, good. Oh no, that's Herschel has 1125. All right, that's good. I can live with that one, Herschel. Yeah, 1125. But Vincent, you haven't told me where your stop is. If you say no stop, that's okay too. I'm telling you where to put it in anyway. Okay, Vincent has his stop at 11. All right, now that is good too, because here we have a support level right around 1125. So if Vincent has his stop at 11, that's okay. But here's why I think you should raise your stop. Vincent, because if you raise your stop from 11 to 1160, you're giving the stock an opportunity to rally on this, oh, I'm sorry, on this bullish, oh, where is it? Sorry, let me readjust. We already know where you're long it, so let me go back to the way the chart was. If you raise your stop up to 1160, you're giving the stock room to breathe and respond to this bullish engulfing pattern. Now, if you didn't have any position at all, I would still take a position because this stock looks like it really wants to break out. And this bullish engulfing pattern is happening right at a resistance area. So that's extremely bullish. There's a good chance the stock is going to do this and then pull back from here. So once the stock breaks out over resistance, you then move your stop from 1160 up to 1220. Hope everyone's getting this. I know I'm going quickly, but you want to trail the stop manually so that you can participate. Now this is another one that I would put on my watch list, or this is a buy candidate right here. The only thing that you have to consider, which leads me more to protect the downside, is what? Can anyone see something on the chart that's popping out that would lead me to believe that it could even go a little bit lower before it goes higher? Can anyone tell me what that is? Yes, thank you. Nathan, Shannon, Jeff, Amelia, Lloyd, Ann, you're all seeing it. See, there's a little gap below the market. So there is a good chance that the stock might even do this, even after the bullish engulfing pattern is formed, and does that. Now, if it does this, and you're still long the stock, okay, Vincent, if you're still long the stock, I would buy more on a bounce at 1190. Even though you're long it at 9, I would actually buy more after the gap fills, and then again trail your stop up. Okay, I'm going to go just a little bit over, if you're okay with that, folks, because we had a little bit of a technical challenge there, and I want to make up for the time that we lost there. So if you could, put in another stock symbol. If you're quick to the keyboard, I'm going to pick that one up. I'm talking more rapidly than I normally do. Sound like an auctioneer from New York. All right, Amalia, HUL. Please let me know what your position is so it could help you with that. HUL. Oh, I didn't type that in right. Is it HUL? It has to be a Canadian stock, if you could. Or is it HUI? I'm not getting HUL. Let's try that again. HUL. No, I'm not getting that. It has to be a Canadian stock. I mean, a U.S. stock. Sorry about that. Who wants to put in a stock symbol? And oh, is that a HUI? Let me try HUI. Maybe my eyes are getting blurry in my old age. Oh, there it is. Is it the Amex? Is this the right one, Amelia? Is that it? The Amex Gold, the gold one? Okay, index. All right. Now, like silver, you got to be really careful with gold. It does trade very technically, but here's what's happening with this one. Is this the one, Amelia? Is this the right symbol? I don't want to start commenting. Okay, thank you. All right, now look. Here's what I'm talking about. 80% of the time after a gap fills, it reverses. Well, guess what? The gap filled yesterday. So there's a good chance this is going to happen. But what do we need tomorrow before we buy it? Need the green candle. Once we get the green candle, we put the stop below support. Boom, there it is, done. Okay, next stock. There we go, next stock. Who wants to put another one? I want to try to get a couple more. All right, T, do not own it. All right, Ron has AT&T. And let's put in AT&T. Okay, this looks interesting. Now, remember the gap fill. This is pretty close. We're talking pennies here. The stock did make an attempt to fill the gap, so I'm going to count that in. Here's a roll reversal line support we can put right there. Big candle here. Volume is going up. The tricky thing about this one, okay, Ron, the tricky thing is, and this is what causes me to hesitate sometimes, even though we had a really big candle. The stock stopped, today's high stopped right at a resistance area. Boom, that's number one. Number two, we have 1, 2, 3, 4, 5 green candles in a row and an almost vertical price move. That doesn't make me feel good because it's gone vertical, and these vertical moves cannot sustain. The only thing that I see that's really supporting that idea is the high volume. So what I would say is this is one where you're going to have to wait for the breakout before you get in. And then if it breaks out over that high around 35 or 35.20, then you got to keep your stop really tight. Keep it right around 35 or 34.90, because this one could quickly come right back and do something like that. Before you know it, you've lost $2. There's a lot more comfortable stocks out there to get long that look a little bit more, I guess you could say, gradual in the signal. This is an extreme bounce in a vertical move, so it's very, very hard to jump into that and feel comfortable about a long position with all those green candles in a row. Because you look back here, same thing happened, right? 1, 2, 3, 4, 5, 6, 7 in a row, vertical move at resistance, and then the stock came pounding down. It lost 50% of that upward move in about a week and a couple of days of trading. So this whole thing that we see back here, Ron, could very well repeat back here. Now I know I made a mess of the chart with all these lines on here, but when I remove the lines, you can compare this vertical move and pullback to this vertical move and potential pullback. Okay, I'm going to try to get a couple more. I don't have a screen. Did the screen go away? I still have a screen? Uh-oh. Now, Ben has a question. You want to buy on a green daily candle? Do you wait until the end of the day to buy? Actually, Ben, I try to wait until the last 15 minutes of the trading day. And that's exactly what happened with my silver position today. Silver with SLV was on a run early in the day. And, lost my screen. Am I still looking? Yes, still see the screen. Okay, thank you, Robert. Okay, let me see what's happening with my silver SLV. Come on, what's going on here? There we go. SLV. Sorry, I just typed in the wrong symbol. Okay, look, let me get rid of my lines. Let me show you what was going through my mind, okay, as an example of how to actually start trading. What I do is I go to the intraday chart, okay, and what was happening early on, originally silver sold off, although it was still higher on the day, it sold off here. Let me zoom in so you can see what the price pattern looked like. All right, and so it sold off here. It went, set a new high, and then here was the critical moment up here when we retested the highs and it failed to get higher. And then look what happened. We started to successively hit lower highs, and then we hit a lower high here. It was actually, I sold my shares at 1688. I sold them actually right here, right before the market closed. And I'm still okay with that, because if you look at the intraday or the daily chart, excuse me, there's gaps below the market, and this pattern right here is very, very close to a gap fill. And like I said at the beginning of the presentation, these gaps could very well draw the price down. And there was a point in time where this was a doji. It was a cross. So we see price going up, volume going down, below gaps, and that's what I do. I waited to the end of the day so that, you know, I could try to make an intelligent decision, and that's what I usually do. So Ben, I hope that helped you out. Okay, last one. AXP, I think that's American Express. Okay, AXP. This is for Robert. Robert, you're looking to buy it. I would say no go on the buy on that one. No go. Can anyone tell me why? It hits me right away. Can anyone see what I see on the screen right now and why I am saying no go? Can anyone see that? Anything's popping out on someone's mind there? Actually, there's a couple of things. What am I seeing that I'm about to announce? Lower highs. Well, actually, yeah, today was a lower high. But what else? Yeah, thank you, Shannon. Bearish engulfing pattern right at resistance. Boom. To the penny. Upward leg. See here? On lower volume. Bearish. So what happened yesterday, the bearish engulfing pattern is supporting a potential pullback in this leg. So I think is going to happen is this. Can anyone tell me why I drew my bounce there? Come on, who's paying attention? I know I'm keeping the pace high. Can anyone tell me why I put my bounce right there? Roll reversal. Thank you, Robert. Thank you. Filled the gap. I don't see where the gap was, but I see this. Boom, right there. That's what I see. That's why I drew the line on the bounce. So if you own it, I would keep a really tight stop, probably right below today's low. And then if you get stopped out and you're in cash and you do see the stock bounce here, then go back into it. See, you can buy back lower as long as you put your stop at the key roll reversal support to protect yourself. See, now you're preserving your capital, and which also means you're preserving your buying power. So folks, I'm really having a good time analyzing the markets. I could only hope that you continue to progress with your own analysis, because we at the Market Guys, my partner and I, we really pride ourselves on providing you with the best financial education around so that you could learn how to put the odds in your favor. And this is how we do it, just by looking at the charts. Notice there wasn't a single time where I actually pulled up the fundamentals on any of these stops. Why? Because the fundamentals lag, LAG, lag the price. They don't lead the price. If you're shopping for good candidates, nothing wrong with looking at the fundamentals, but don't let the fundamentals be the reason for you making the decision. It should be the technical charts that tell you when to pull the trigger, like I said before. Fundamentals tell you which stocks to get in, but the technicals tell you when to get in, and most importantly, when to get out, based on roll reversal and how you use your stops. So again, I want to thank everybody for joining us tonight. Sorry for the technical problems in the beginning. Again, for those hockey fans out there, I hope your team wins. Right now, I'm still rooting for the Rangers, and we're going to hope that they take it to the Stanley Cup. So again, folks, have a great evening. We'll talk to you soon. So long.